Suspense accounts. A suspense account is opened when the two sides of the trial balance differ and the cause for this difference is not immediately apparent. It is opened with the difference between the totals in the trial balance. When the errors are subsequently discovered, they are corrected using journal entries. If all the errors are discovered, the suspense account will close when these journal entries are passed. A suspense account enables a business to prepare draft financial statements quickly, even though the trial balance does not balance. The balance in the suspense account is entered either as a current asset or a current liability in the draft financial statements. Tip: when the error has resulted in an imbalance in the trial balance, a suspense account is opened. Errors. Errors are classified into two types: errors that affect the trial balance and errors that do not affect the trial balance. Let us look at the errors that affect the trial balance first. These are predominantly of three types and are shown by differing totals in the trial balance. These would be the result of errors in additions, using one figure for the debit entry and another figure for the credit entry, and entering only one aspect of a transaction. For example, entering a debit and not a credit, or vice versa. Let us now look at errors that do not affect the trial balance. These errors have names: errors of omission, errors of commission, errors of principal, errors of original entry, errors caused by the complete reversal of entries, compensating errors, and errors of transposition. Let us look closely at the errors that do not affect the trial balance. They have names. Errors of omission. This is committed when a transaction is completely omitted from the books. For example, the firm sold inventory of $500 to Jerry, but did not enter it either in the sales account or in Jerry's personal account. Errors of commission. This type of error is made when the correct amount is entered, but in the wrong account belonging to the same class. For example, where a sale of $100 to L. Dans was entered in the account of M. Dan. Note, both are personal accounts and therefore belong to the same class of accounts. Errors of principal. This is when an entry is made in the wrong class of account. For example, repairs to a motor van are debited to the motor van account. Repairs is a nominal account, whereas motor van is a real account. Errors of original entry, where the original figure was incorrect. Example: an error was made when totaling the amount of a purchaser's invoice as $340 instead of the right amount of $430. This wrong figure, $340, was used to make a double entry. Errors caused by a complete reversal of entries. This happens when the correct amounts are used, but entries are made on the wrong side of the accounts concerned. For example, Samson paid us $350 by check, and we debited Samson and credited bank. Compensating errors. This is when errors cancel each other out. For example, when the sales account is overcast by $100 and the salary account is also overcast by $100. Errors of transposition. This is made when the individual digits in a number are entered in the wrong sequence. For example, we have debited bank and credited Massey's account with $450 instead of $540. This is an exhibit taken from my book, Revising AS Accounting, a Study Guide. A bookkeeper extracted the trial balance on the 30th of June 20X3, which failed to agree by $440, a shortage on the credit side of the trial balance. A suspense account was opened with the difference. In the first week of July 20X3, the following errors made in the previous financial year were found. Let us look at each error and the journal entries required to correct them. A. Sales of $380 to Manuel had been debited in error to Mason's account. The rule to be followed when correcting errors is undo the wrong things and do the right things. Since Manuel was the receiver, we will debit his account by doing the right thing, $380. Mason's account was debited in error. We will undo the wrong by crediting his account, $380. B. The sales journal had been undercast by $780. This is a totaling error. In order to increase sales, we will now credit the sales account $780. Therefore, the suspense account will have to be debited $780. Error C. The rent account had been undercast by $300. In order to increase rent, we will have to debit the rent account $300. Therefore, the suspense account will be credited $300. Error D. The purchases journal had been undercast by $90. In order to increase purchases, we will have to debit the purchases account $90. Therefore, the suspense account will be credited $90. Error E. The sale of machinery, $1,500, had been credited in error to the sales account. We will undo the wrong and do the right thing. Since the machine was sold, we will credit machinery account $1,500. As the sales account was credited in error, we will undo the wrong and debit the sales account. Error F. A credit balance of $50 in the purchases ledger had been omitted from the list of balances extracted from the ledger. The total of the list had been included in the trial balance. Let us look at the note. This is not a double entry error. The error was made when a transfer was being made between the ledger and the trial balance. Nevertheless, it has affected the trial balance. The list of balances must be corrected, and a one-sided entry in the suspense account is required. Since the credit balance was omitted, we will debit the suspense account with $50. Let us now open a suspense account by recording the difference in the trial balance. As the difference was a shortage on the credit side, we will enter $440 on the credit side of the suspense account. Now let us go through each error and make entries in the suspense account. Error A, the suspense account is not affected. Error B, the suspense account has to be debited $780. Error C, the suspense account has to be credited $300. Error D, the suspense account has to be credited $90. Error E does not affect the suspense account. Error F, the suspense account has to be debited $50. On balancing the suspense account, we realize it has closed. This often happens if all the errors were discovered. Additional information. The profit for the year was $4,500. You are to calculate the revised profit for the year after the errors were corrected. The profit before commission was $4,500. With A, there is no effect on profit as both the accounts involved are trade receivables. Error B, there has been an increase in sales and therefore we will add that back to the profit. Error C, there is an increase in rent which is an expense. We will deduct this from the profit. Error D, there is an increase in purchases which is an expense. We will deduct $90 from the profit. Error E, there is a decrease in sales revenue. We will deduct that from the profit, $1,500. Error F, no effect on profit. On totaling the additions column, we get $780. On totaling the subtractions column, we get $1,890. The net result is to subtract $1,110 from the uncorrected profit of $4,500 to give us $3,390, the revised profit for the year. Let us look at that tip again. If an error has a name, then the suspense account is not involved. Example, error A, which was an error of commission. Hence, the suspense account was neither debited nor credited. Let us look at another example on suspense accounts, adapted from a past paper. A business prepares its trial balance at the end of a financial year, and it does not balance. The difference is entered in a suspense account. Notice, we are not given the difference between the totals in the trial balance. We will have to work this out. We are, however, given the following information. The following errors were discovered on checking the financial records. Let us look at each error separately and the journal entry required to correct it in the working. Error number 1. The credit balance on the bank current account of $1,650 had been entered in the trial balance as a debit balance. Let us undo the wrong thing. As it was entered wrongly as a debit balance, we will credit the bank account $1,650. Let us now do the right thing. Since it was a credit balance, we will credit the bank account again, $1,650. Therefore, the bank account will be credited with $3,300, which is 1,650 times 2. And the suspense account will be debited. Error number 2. The total of the purchases returns journal of 960 had been debited to the return inwards account. Let us undo the wrong thing by crediting the return inwards account 960 and do the right thing by crediting the purchases returns account of 960. Therefore, the suspense account will be debited with $1,920, which is 960 times 2. Error number 3. A prepayment of $450 for telephone charges at the start of the financial year had not been brought down as an opening balance. Since this opening balance is a debit balance, we will debit telephone account $450. Therefore, suspense account will be credited $450 in the working. Error number 4. The balance on the sales ledger control account at the end of the financial year of $13,625 had been carried down as $13,652, which is $27 more. Since this balance is a debit balance, we will now credit the sales ledger control account in the working with $27, the difference. Therefore, the suspense account will be debited $27. Let us now open our suspense account. Since we do not have the balance brought down, we will leave that empty for the time being. Error number 1, bank account is credited and suspense account is debited. Therefore, the suspense account is debited with $3,300 according to working number 1. Working number 2, the suspense account is debited $960 for purchases returns, $960 for return invoice. Error number 3, the suspense account is credited $450. Error number 4, the suspense account is debited $27. On balancing the suspense account, we now arrive at the figure of $4,797, which is the balancing figure and is the difference in the trial balance totals. Tip: you must work backwards to arrive at the opening balance of the suspense account, or the difference in the trial balance totals, which was not given to us. More information about AS Accounting, a Study Guide. The content of this book matches the latest CRE AS syllabus and is pitched at a level that is extremely workable. The book is written by a qualified and experienced teacher and fills the need for a guide that is solely meant for the CRE AS accounting course. Some salient features of the book are: it unpacks the CRE AS accounting syllabus, IAS terminology has been used, students love the unique question and answer presentation of theory, there are numerous tips for success, and exhaustive exercises for practice. This book is available at most book outlets worldwide, including Book Depository and Amazon. They are available in hard copy as well as in e-book format. Here are other titles available: AS Accounting Workbook, a write-in workbook that will help you prepare for your examinations, and Revising A-Level Accounting. Please contact me at junebaptista@hotmail.com for more information and for answers.